Hello and welcome to my finance channel, where I share tips and insights on various topics related to the financial markets. In this video, I'm going to explain how to trade options and futures in the US and Europe. Options and futures are two types of derivatives, which are contracts that derive their value from an underlying asset, such as a stock, a commodity, or a currency. Derivatives allow traders to speculate on the price movements of the underlying asset, or to hedge against the risk of adverse price changes. Options give the buyer the right, but not the obligation, to buy or sell the underlying asset at a specified price, called the strike price, on or before a certain date, called the expiration date. The seller of an option receives a premium from the buyer in exchange for taking on the obligation to fulfill the contract if the buyer exercises it. There are two types of options, calls and puts. A call option gives the buyer the right to buy the underlying asset, while a put option gives the buyer the right to sell it. Futures are contracts that oblige the buyer and seller to exchange the underlying asset at a predetermined price, called the futures price, and date, called the delivery date. Unlike options, futures do not give any flexibility to either party. They must fulfill their obligations regardless of the market conditions. Futures are standardized and traded on exchanges, while options can be customized and traded over the counter or on exchanges. To trade options and futures in the US and Europe, you need to open an account with a broker that offers access to these markets. You also need to have enough capital and margin to cover your positions and potential losses. You should also familiarize yourself with the different types of options and futures contracts available, their specifications, their pricing models, and their risks and rewards. Trading options and futures can be profitable, but also very risky. You can lose more than your initial investment if the market moves against you. You also need to pay attention to factors such as volatility, liquidity, time decay, and transaction costs. You should always do your research before entering any trade, and use appropriate risk management techniques such as stop-loss orders, diversification, and hedging. I hope you enjoyed this video and learned something new. If you did, please like, share, and subscribe to my channel for more videos like this. And if you have any questions or comments, feel free to leave them below. Thank you for watching and happy trading.